Sam Daume, and I'm with Fred C. Church Insurance. We're an independent insurance broker and risk advisor. Been around since 1865, insuring outdoor organizations for 10 plus years, and we insure also a number of educational institutions. That's a big part of our practice, so, 250 educational institutions. Look forward to spending some time with you.
And what we're trying to do with this session is give you kind of two perspectives from Sam and I. Sam's our broker, I'm the client. Our program is a fairly large program. Yours might not be nearly as large as Outward Bounds, but we're going to try to keep it very basic, Insurance 101. And Sam's going to go through the basics of how a policy works and what coverages are. And then we're going to explore some scenarios based on what you hear from Sam. And we may segue after that into some more specific coverages. And if we have time, another scenario. And feel free to ask questions. We may push the questions off to the end because we got a lot of information to cover. But thank you for being here, and Sam's going to take the first segment here.
Sounds good. Thank you, Steve. Remind me if I don't push it. So yes, this is a basic. This is 101. However, as we go through some of the basics and you have questions, let's go ahead and ask the question. I'll repeat it because I think we are being videotaped. So if you want to be famous, stand up and smile. Insurance can be a complex and confusing topic for many of you. It is they are legal contracts that the insurance company is providing you. So the devil is in the details, and so it's important that you understand what is and isn't covered and why, and that you have a good relationship with your broker, your insurance carriers, so that you understand what is and isn't covered and can navigate through anything that happens. So this is an illustration. We thought we'd start with this. Steve, you maybe want to make a comment on this?
Yes. Well, when I first went to work for Outward Bound USA, we had these large boards of folks that wanted to understand our insurance program. And I used to go in there with all this paperwork and spreadsheets, and it was really difficult. It was like talking to the wall. And Fred C. Church put together this graphic of our insurance program. This is a sample of what it looks like. If you don't have this and you have a board or executives that you're trying to explain insurance to, put one of these together. Basically, it's a graphic of how all the coverage layers in, and Sam can go on. It's a really useful tool. This is on the website. All this stuff is going to be downloaded so you can get at it.
But essentially what we try to do here is to summarize at a snapshot what's covered and what not, how the policies are structured. On the left-hand side, you'll see you probably can't see, but you get a sense in the green and the dark blue underneath. That's the operational liability coverages. And you can see that in this hypothetical client, they have about a $10 million umbrella policy, which rests on top of the $1 million of primary coverage underneath. So the general liability, which covers, we'll go into the details, but the automobile liability, international liability, workers' comp or employment or employee injury coverage, and then abuse and molestation coverage. All of that is under the operational liability columns. We then go into what we call the management liability section, and you can see there's actually the medical malpractice sort of stands on its own. If you have people that need medical licenses, they need their own coverage, so you need to protect them for their own layer of coverage for that. And then the management and board liability is broken down into, if you're a nonprofit, you might have directors and officers insurance. Even if you're not a nonprofit, you should strongly consider employment practices liability. Then there's crime and fiduciary coverages, as well as cyber liability. And all of these coverages, we're going to go into some more detail. And then the last one is the asset protection. This is the property insurance or business interruption insurance if your physical assets are impaired and you have an interruption in your business. So again, a high-level tool that shows the limits, who the insurance companies are. We usually try to write the AM Best ratings, so the financial stability of the carriers, the deductibles, again, a snapshot that facilitates conversation. So we're going to start with the general liability policy. I think for all of you out running activities in the wilderness, this is really the cornerstone of, and probably most important policy that you guys need. At its basic, it covers any bodily injury or property damage that you may inflict on a third party. Also covers medical pain, personal injury, and medical payments in some cases, which we'll go into more detail. So the insurance company, by issuing, most of the insurance carriers that issue these policies issue a policy that gives them the right and duty to provide your defense. We'll go into a little bit more detail about that, but basically the three things the three items that you're going to get in your general liability policy is you're going to be able to hire an attorney to provide defense. If there is a settlement that is entered into, which is what happens in 90% of litigation against an organization, it provides coverage for the settlement, and then it covers a judgment if you do litigate and go to trial or there's a judgment against you. All of that is in your general liability policy.
Can I say something, Sam?
Yeah.
One thing I look for when we have a general liability carrier is using, if you can get them to give it to you, one conduit, one person who's working with you to get to attorneys to deal with claims. A lot of carriers will just pull a claim representative off the shelf and assign it to you. It's worth asking them ahead of time, can I have one person that works with us?
So the next bullet is additional insurers, probably something you're familiar with. These are when other third parties that you're contracting with want to share your insurance. So they're asking to be able to tap into your insurance if there's an accident where you guys are causing negligence and the other party is being dragged in. So be careful, understand who you're offering up that coverage to. Be thoughtful on your entering into those contracts. And in many cases, as you're engaging with guys and operators who are actually doing work for you, flip this in the other direction. You're going to want to make sure that they have adequate insurance that are adding you as additional insured, so that you properly transfer the risk to them. So that's an important topic, and glad to dig into that. So there's plenty of lawyers in the room, so please speak up if any of you have value-added comments to share. So subrogation is another concept. If an insurance company does pay out on your behalf and someone else was responsible for causing the injury or the accident or property damage, that's the concept where the third party, the insurance company can basically go and seek reimbursement from the other party. So basically they're going to step in your shoes and try to collect that money and get it back. And that's generally a good thing, except in some contracts that you're partnering with people where you're in sort of in the action together. You two may want to agree not to go after each other after a claim and just rather have each of the different insurance companies pay on your behalf. So coverage territory is also a very important thing to keep in mind. Most coverage is worldwide, but it may only cover lawsuits that are brought here in the United States. So you want to pay attention to, if you have international operations, how the international liability insurance is structured, and see if you can get coverage for, most of the time, the United States is a much more litigious environment than other countries, and so most of the time they're going to want to sue back here, but you want to have protection abroad as well. So next, these are, as I mentioned, these are contracts that you're entering into with the insurance company, and the devil's into the details, and there are exclusions in every single insurance policy. And the reasons that there are exclusions really are boiled down to three main points. One is it may be an uninsurable exposure, like the first one, things that are expected or intended. You can't really insure for intentional acts. Most of the insurance exclusions in a policy are actually because the thing that's being excluded is better covered under another policy. So you'll see that as we hit some of these exclusions. And then the third one is for underwriting reasons. So if an underwriter is uncomfortable with some of the activities or operations that you're doing and they don't want to provide coverage for that, that's where there may be an exclusion. And those are the ones you really want to pay attention to and understand, make sure you have an understanding of those. But so expected, intended would be excluded. Yes?
Sorry to interrupt. In your experience, how negotiable are the exclusions as opposed to buying riders?
When you say buying riders, what do you mean by that?
Buying supplemental.
Supplemental. Yeah, I mean everything's negotiable. It depends on your leverage. So if you're a small operator, you may not have as much leverage in the marketplace, and therefore may be forced to accept the terms that have been offered. But yeah, and competition is what drives negotiation often, so you want to try to have your broker go out and access multiple insurance carriers to try to negotiate the best possible pricing, terms, and conditions. So contractual liability can be a confusing thing, but be careful there. You can't just, as a simple concept, keeping this very high level, you can't just agree to cover anyone for anything in a contractual agreement. It has to be really limited, in this case, for your general liability, to bodily injury or property damage that you negligently cause that's in an insured contract. So you want to be really careful about understanding the contractual liability obligations.
You can agree, but the insurance won't cover it.
That's correct. That's exactly. Yeah. Oftentimes, that's the way it is. So we review a lot of the whole harmless indemnification portions of contracts, and that's counsel that we provide frequently. So I mentioned workers' compensation. So if your employees get injured in the course of their employment, you need to have workers' compensation insurance. You're not going to get coverage here in general liability. Pollution is excluded. Aircraft, auto, watercraft, is usually covered elsewhere, although basic watercraft for small, usually under 26 feet is usually covered, but look carefully if you have a lot of programs in the waters, you really want to look carefully to make sure your underwriter understands what is and isn't, or you understand what is and isn't covered.
And Sam, that is negotiable sometimes depending on your carrier. You get 30 on the 31 feet or whatever.
Exactly. So again, I won't hit on all these, but these are in the bottom. Malpractice, that's something you want to get elsewhere. Abuse and molestation is definitely negotiable and something you want to consider. We're going to talk a little bit more about that at the end. That sometimes can be part of your general liability or sometimes a separate policy. Mental anguish is usually something you can negotiate in, and then if you have liquor exposure, you want to make sure that you have coverage for that. Sometimes they want to sneak in those exclusions. So then, how much is enough is always an important question, and generally your general liability policy is going to provide the first $1 million of a coverage per occurrence, and then oftentimes we'll have either $1 or $2 million aggregate over the course of the year. So if you have a $2 million aggregate, in theory, you could have two $1 million accidents in a year. And if that is not enough, you feel you're uncomfortable, not going to protect your assets, then you want to layer up excess coverage on top of that. And generally, it would go above your general liability, automobile, your workers' comp, or a portion of that policy, the employer's liability. And then you want to, if you have international operations, you want that to include that as well. It usually doesn't pick up these other coverages. It's usually a separate tower.
From a practical standpoint, if you have like a car accident that exceeds your $1 million liability, and you start to go into that umbrella, what does that look like? Does it pay out differently, or are there different terms on it?
So simplistically, it should be what's called follow form policy. So it should basically, umbrella policies are usually pretty short and easy to read because it essentially says we cover what's covered by the underlying policies, and it just goes above it. So they're going to pay out $1 million, then transfers the defense, and everything goes to the excess carrier to take it from there. Great, good question. So property insurance, this is where you get coverage for all of your assets, your physical assets that you own. What's really critical here is that you've properly disclosed, usually in a document called the Statement of Values. So you want to make sure, as you're submitting to the underwriter on your property insurance, that you've listed all of your assets, all of your buildings, all of your contents, any business interruption insurance that you want on that one simple document, that one document that called the Statement of Values. Because if it's not listed, it's not going to be covered unless you've negotiated a little bit of a sublimit of coverage, for some unnamed or locations. If you have locations that are vacant or unoccupied for a significant amount of time, you want to understand those restrictions in your policies, because insurance companies can restrict coverage drastically if something's empty for a significant portion of time. So business interruption is another exposure. Again, people think that when they have business interruption insurance, it's going to cover any interruption to your activities. So a course gets closed because an instructor gets sick. Well, that's not what's going to be covered here. This is only coverage for business interruption, loss of income, or extra expenses that you need to incur to continue your programming because there's a covered loss to one of your covered properties. So for many of you who are out in the field, that may not be a critical piece of component, but if you have physical assets that you're running your operations, you want to include extra expense coverage and business interruption. So flood and earthquake, and I should have added, wildfires, high hazard risks. Insurance companies are very cognizant of their amount of coverage that they're putting out, their capacity, so they manage this exposure very carefully. If you're in a high hazard zone for wind, flood, wildfire, it's likely that you're already well aware that your insurance company has either restricted coverage by limiting the total amount of coverage that you have, and likely giving a high deductible so that you have a lot of exposure for these higher risk exposures. So, pay attention to that. Unfortunately, if you're in a high hazard activity, don't pretend you don't have the exposure. Understand it, and make an educated cost-benefit decision as to how much you can afford. And
Sam, you threw in wildfire. Is that now? Are they? Because when we made the slide, it wasn't. They didn't have their radar on it, but is it starting to show up?
So most of my clients are East Coast, where we don't have as much of this exposure, but it's becoming more of an underwriting issue, but we're not seeing a lot of coverage restriction yet. I don't know if others of you have dealt with that, but
Sitting in our property policy.
yeah. It's certainly getting a lot more attention. Yes?
So if you have to cancel a program due to smoke or fire, which is not property, you're in a public space, is that business interruption, or is that?
No, because the trigger of the coverage needs to be damage to your
No,
business.
there is an egress and
Well, that's true.
So if you can't get to your property to operate because the fire closes the roads down, you can find some coverage there.
But simplistically, the answer is no. If you don't have any property, then definitely you're not. And then the last, inland marine is an insurance term, and these are all the things, the toys that you have that are moving around, or contractor's equipment. That's, because it moves around, it's a different type of insurance, but you want to make sure you list and then insure all of those assets as well. So, automobile, one of the biggest exposures, one of our scenarios at the end, we're going to talk about an auto accident. But the basics here on the 101 is if you can, get coverage for what's called Symbol 1, and this is going to provide coverage for all automobiles. So that's going to provide coverage for your owned automobiles as well as your hired and non-owned. So any rented vehicles that you rent, or any vehicles that are used by your employees in the course of doing business. When it comes to non-owned automobiles, it's important to understand and that your employees understand how that coverage works. In the United States, if you own the automobile and you get into an accident, that insurance on that car is going to be primary. But if you're doing something for your organization in the course of your business, if you have this coverage, there's going to be excess coverage on top of the employee's coverage. Damage to the often asked question is if the employees are driving on business and they get into a fender bender and damage their own vehicle, that's not covered, that's on their own nickel.
And the liability, the general liability does come in those situations. We're talking about the vehicles and not the liability that arises out of, there's what the umbrella will come in and cover the liability expense on a personal auto being used for business.
Correct. Well, the auto would be, yes.
Yeah.
But not damage to the employee's car themselves. Yeah, gotcha.
I got to ask you a question earlier I didn't know the answer to was, and you guys may not know the answer, but do you know what the status of the 15-passenger van thing is now? I mean,
We're gonna dive into that later.
It's covered, but you may not have a very good defense. So most insurance carriers are not excluding it, but they may not want to provide coverage for you. So it's more of an underwriting issue still. But we're gonna hit that. So on the automobile, I think the next thing I just say, a lot of you may be towing trailers. The liability coverage for your trailers follows the automobile that's towing it. If it's a big trailer, you want to, and it has it's expensive to replace, you want to actually specifically schedule that on your policy as well. Uninsured and underinsured motorist is if you get hit by someone who doesn't have any insurance or doesn't have enough insurance. This will allow your insurance company to step in and act as if the other party had insurance and allow your vehicle passengers to collect from your own insurance company as if the other person had insurance. And then most auto insurance carriers have sort of an enhancement endorsement that has a lot of bells and whistles, so you want to make sure you ask for that. So directors and officers, so transitioning to management liability, This is, really for most of for nonprofits in the organization, although, for-profit organizations do buy directors and officers. This is going to cover, the defense costs and settlements for wrongful acts that you guys may be alleged against your organization, or essentially, said another way, a breach of duty. So defense costs for this can be expensive. Litigation can be drag on for years. It can be emotionally draining. I mean, this goes with bodily injury litigation as well. The true cost to an organization for when you're involved in litigation is far more than just the dollars, for sure. And then, of course, when it comes to reputational risk is a huge issue here as well. So, when it comes to directors and officers, these exposures are a little bit, donors, beneficiaries, members can allege wrongdoing on your part for the way you're managing your organization, the way you're misallocation of funds, creditor suits, breach of contract, improper voting or governance issues. These are all sort of things that could be picked up in a directors and officers policy. But essentially, it's the breach of your fiduciary duty in running the organization. The duty of loyalty that you have to your shareholders or members. Yeah.
What about something like we work with AmeriCorps? What about disallowed costs that we have to reimburse the corporation for?
Yeah. So disallowed costs.
Grant costs. So we get grant dispersals and they
Yep.
come back later and do an audit and say those were disallowed costs.
Yeah, I think that's a business risk. I don't think that's going to be covered by your insurance. Yeah.
For international organizations that are housed in HQ in the United States, we just had a claim, and the director and officer insurance company said that because it happened abroad, they're not going to defend it.
Yeah, so that probably is because on a couple slides earlier, there's a portion of each policy called the coverage territory, and it explains where the policy applies and doesn't apply. So it sounds like that policy didn't have coverage for international directors and officers suits. So that seems to be a problem there for you. But you can get coverage for that. You can get worldwide directors and officers insurance. Yeah.
Does that mean your director was overseas?
No,
Or the...
we're going to be sued as an organization, and I guess the mechanism to defend ourselves was through the D&O insurance policy.
Well,
We're going to be
what-
sued as an organization for an event that happened.
Did someone get hurt, or is it alleged
Yeah.
mismanagement? Someone got hurt. So that's your general liability policy or your international policy. So that wouldn't be your directors and officers policy.
That was actually sexual harassment. So
Okay, there you go. Now we're getting all of the story. All right, we'll dig into that later. So whether you're nonprofit or for-profit, I strongly encourage you to explore employment practices liability. This is if you're alleged to have discriminated or negligent, wrongful termination, discrimination, harassment. These non-bodily injury type of exposures brought upon you by your employees is an exposure that you want to seek coverage for. It's a response for the Civil Rights Act of 1991. Litigation has been on a continual upswing here, although actually I was encouraged as I updated this slide from last year that for the first time in a while, trends were down as to the number of actual cases filed in the EEOC. So that was an interesting trend. But you can see the type of claims that would be covered here. Retaliation, you can see the number of claims, and that's when someone, maybe a good example like that, they are a whistleblower and they bring up something, and then you turn around and fire them. You're going to get yourself in more trouble with that retaliation type claim, more and more of those type claims. So race, age, sex discrimination, those are all things you want to manage carefully, try to navigate, have good HR policies and procedures, but if you do get into litigation, this is the policy that's going to cover it. It usually has a pretty significant deductible, as insurance companies want to have, make sure that you have some meaningful, significant skin in the game. So here's some considerations on your directors and officers and employment practices. Most policies that you're gonna face are what's called duty to defend policies. That means that the insurance company has a duty to provide you defense. It also means that they generally have the right to appoint and select counsel for you. And be careful or make sure you understand what rights they have with regards to settling claims. Hopefully you can, be a partner with them in before they go out and make any settlements. But in general, you need to definitely be, I think you made a comment earlier, be proactive. If you want specific attorneys that you want to be involved in your litigation, be proactive before litigation happens. It's also important to, as you're completing these applications, these often, especially for D&O employment practices, these applications are oftentimes a warranty. So if you make, misstatements on your applications, that can restrict or void coverage. So you want to be truthful and open. You also, while I'm thinking of it, I can't remember on the slide later, but if you do have any type of claim, you want to involve your insurance company up front. You don't want to try to head down the path on your own and wait till things get bad and then pick up the phone and call your insurance company, because they may not cover your lawyer's costs before they get involved in the claim. Employment practices, you can usually add in not only coverage for suits against by employees, but sometimes by third parties like vendors. So that's an enhancement that can be added. And then this is a hot issue for many of you out there, but wage and hour issues and violations. Generally, the insurance companies like to exclude that. If they do provide coverage for that, they may just provide defense costs, successful defense cost coverage, and it's usually has a lower sublimit of coverage there. So make sure you're appropriately paying your employees overtime and in compliance with laws, because the insurance may be quite restricted as to what coverage is there. And there it is, the deductibles can be significant. So go quickly through some other coverages. So crime and social engineering fraud. Crime coverages, the core of that is employee dishonesty, white collar crime. You have to think that wouldn't happen, but I'm telling you it happens more frequently than you think. But beyond just plain old garden variety employee theft, there are a lot of other ways that money can get stolen from your organization. Computer fraud, fund transfer fraud, and all of these that I list here, credit card fraud, usually can be added on if you ask the right questions and get a good comprehensive policy. This is definitely a policy. Spend a couple $100 more to get good broad coverage. And one of the really growing exposures that 5 years ago was not even covered by a crime policy is the social engineering fraud or fraudulent instruction. And that's when you get tricked out of sending, wiring money, usually in the case where somehow someone under false pretense sends an email and tricks you into sending money out. Normally that wouldn't be covered by a crime policy because no one's stolen the money. You voluntarily sent it out. But most of the crime carriers now are providing a sublimit of coverage. Yeah?
What's the client coverage student?
So that's, that's basically theft of your students' coverage. That meant, probably that's more of an education type, exposure. That someone, So on the social engineering fraud, I'm going to touch on this with cyber liability, but just my risk management advice for you. This exposure, criminals are getting more and more sophisticated. They're no longer trying to just barrel through your firewalls and steal your money. They're trying to trick your employees. So be very, very vigilant. Never trust an email. For all of your employees that are involved in accounts payable and wiring money, always make sure there's verbal verification from vendors who are asking for different payment instructions. So fiduciary liability, very quickly, is covers really two things. This is essentially a breach of fiduciary duty in managing your retirement or other employee benefit plans. So if you get sued for breach of fiduciary duty there. But it also picks up administrative errors that you might make in managing those. You forget to add someone to a health plan, those types of administrative errors will be picked up. There can be, some people think, if you have a 401k plan, What's a different coverage that you need is a fidelity bond to cover dishonest theft of money out of your benefit, your 401k plan. This is different coverage. This is a breach of fiduciary duty, so won't spend a lot of time on that. So back to cyber, again, even if you don't buy a cyber policy, I strongly encourage you to do a little thinking and with your senior leadership team about how you would navigate a breach. Engage your attorneys and how you would navigate a breach. There's not a lot of litigation that happens when there's a breach of personally identifiable information going out into the world. So that's good news, but the first party coverages can get quite expensive. So if there is a breach, if someone seems like there's personal information that's been exposed in the world, one of the first things you're going to need to do is to hire a forensic accountant, computer consultant to figure out how big the breach was. We're talking about 25 people or 250 people. You're going to need to engage your attorneys because the notification and requirements are different for each state. And so all of these first-party costs and coverages can add up pretty quickly. And cyber insurance, even though there's breaches, more and more breaches happening every day, thankfully this coverage has remained pretty cost competitive. And so
There's some pretty good coverage in there for reputational expenses
Yep.
too, to
Yeah.
respond to the breach.
correct. And then here as well, for most of my clients, we try to get coverage both on their crime policy for the social engineering, fraudulent instruction coverage, as well as on your cyber liability policy. So get as much as you can because it's sub-limited. The invoice manipulation, I'll just quickly share a story with a boarding school client of mine. Someone hacked into their systems and through a phishing attack and sent out a legitimate accounts payable email to an international student and tricked the family to sending, wiring their full year's tuition to a fraudulent bank or the wrong bank. So, catastrophic exposure for that family. That's a very new coverage that some cyber carriers are just now starting to add. So coming down the home stretch on the coverage section, so student accident and medical coverage is really a sort of, I call it a goodwill. So we talked about the cornerstone, your general liability if you're negligent. The student accident or student medical would be, picking up what's not covered by the family's medical costs. There's also, what we want to touch on here, volunteers can be a tricky area here if you have a lot of volunteers. Generally, workers' compensation carriers don't like to don't provide coverage for volunteers under the workers' compensation. So you want to explore if you can get that coverage under the general liability, but sometimes getting a student accident or an accident policy for volunteers may be a good way to do that as well. Trip cancellation, trip insurance is something to explore, exposure that's out there. I would say most organizations encourage their families to, participants to buy that individually, but some organizations do buy it for themselves to protect themselves. Tuition refunds, similar exposure, more of a school-based exposure. And then if you're running international trips, strongly encourage you to explore one of the providers, not just having good liability insurance, but partnering up with an evacuation assistance provider who not only is going to have the resources and expertise to evacuate someone out for a medical injury or a political risk situation or natural disaster, but maybe more importantly, or equally importantly, can provide great risk management advice and tools to you before you go to a new country, telling you where the danger spots are, where the good hospitals are, all of that. So there's some good carriers here like Global Rescue, ISOS, and many others. So if you're running international programs, strongly encourage you to explore this.
And we combine that with the student accident insurance for our international program and programming, which we have in various spots. A number of years ago, we had an incident down in Argentina, and the student had his own accident insurance. We had a policy that we could have put toward the student, but the student came to us with his own carrier, and it made it very complex for us to manage the incident from a medical perspective and get the student evacuated back to the States. So what we did is go out and get a package where every student that travels, they get their insurance from us. It's their insurance that comes with the package, but when we have to manage an incident, it makes it a lot easier.
Yeah?
In those cases where you have double coverage, can you delineate in a contract or somewhere else which insurance is primary, non-contributory, or?
The insurance company usually tries to do that for you, trying to decide which one is primary, which one's going to be excess. So, but, yeah, that's something to pay attention to.
So you can try and then the insurance company might disagree, is that?
Well, maybe be more specific as to what the example.
So we are working with another organization and we're allowing them to drive our vehicles as permissive users. So we have insurance on the vehicles of the owners, they have unowned vehicle
Yeah.
insurance on them.
Yeah.
We would love for their insurance to be primary,
Yeah.
but
Don't think that's going to work.
I don't think it is either, so that's not something we can do.
Well, it's always nice to ask, but I don't think it's going to happen. You know, the reality is if you're letting them drive your vehicle, you're exposing your organization. You can let anyone you want drive, but just be aware of the risks.
Yeah, we had one of our schools that called and said, can we, when our vehicles are parked, can we lease them to this local school that needs vehicles? And yeah, we could, but the liability all comes back to us, and the 15-passenger van or the transportation issue comes up. I think we're going on to the...
We're good, yeah. So, my partner, Mike Lucas, isn't here. He usually is good for a bunch of questions that makes us go a lot longer. So we got through that pretty quickly. Are there any other general questions that are out there that we didn't hit, that are burning? Okay.
In your experience, what areas do organizations like ours, to generalize, do the worst in when it comes to coverage? I would say many don't know. Abuse and molestation is, I would say, a real hot issue, and I would say many organizations either don't realize how limited their coverage may be, or that they don't have coverage there. I would say that's an area to look at very carefully. Yeah?
If this is too specific, I'll ask it later. What would be your response to how to push for evacuation insurance if one of the barriers you're coming up against in your organization is that the increased premiums don't justify getting that additional insurance for not super things that happen only once in a while? What would be like if you were to push farther? Like what would be like you should do it because?
You just need to have one incident. I mean, you hear that all the time. I've never had it happen, but that's what insurance is all about. If you can, and we used to ask the students to come with their own insurance, and we really didn't audit to it. And that's the Argentina thing. They came with their own insurance, and we had a policy that we could get to respond. So you can let them buy their own, and then you're at the mercy of whatever coverage they've got, and it can be awkward. So you're not only buying the insurance, you're buying the ability to manage an incident. And yet, it never happens. That's the point of insurance. You don't want it to happen, but you want the insurance.
Yeah, I would, how you manage the crisis is going to directly impact your reputation and how you're perceived by your stakeholders. So having, a professional there is, I think, going to be a very value-added thing, trying to make it up on the fly.
Can you build the extra cost into the tuition for the program? That's what we tend to do. It's so much per day for the policy, and we just kind of try to build it into the cost of the program.
We can talk some more. Bob, do you have a comment?
Well, I was just going to make a comment, but I think so much that's where your broker can come in and help you do that cost-benefit analysis. And that's where it's so important to have a broker that understands your industry.
Yeah.
And can really support you those decisions.
Yeah, I mean, when it comes to how much insurance to buy and which policies you're going to buy, I mean, there's always a cost-benefit analysis and where are your biggest exposures. I mean,
And what your deductibles are.
Deductible is a way to save some money, although sometimes you look at it and it's not worth it. So deductibles can be cost-saving tool for you, but they can also be an underwriting tool for you. But I worry most about liability. So
I suggest we go through this scenario because I think it's going to generate a lot of this type of thinking and some more questions, and hopefully leave some room at the other end. But if you kind of pot up in groups of probably 7 or 8, and the handouts are on the chairs, And what we've done is try to create a scenario, and we're gonna read through it, and it's there in the chairs, so you won't have to look up here after we get through it. But it's a situation where there's a wildfire that breaks out in a region where 4 separate groups, staff and students, are deployed in wilderness areas, and this is in the Northwest. Local communities, along with the regional base camp, are ordered by local authorities to evacuate as wildfires are rapidly spreading and encroaching on the base. So there are 10 staff, 40 students needing evacuation from the base. 4 groups in the field are not in the areas immediately threatened by the wildfires, but the thick smoke throughout the region makes breathing difficult. Regional and national news is focused on the fire and the ongoing evacuations. The base camp evacuation goes smoothly. All the staff and students relocated out of harm's way. Base facilities, including office computers and several fleet vehicles left behind, are eventually consumed by the fire. The 4 groups in the field, while not directly threatened by the fires, find breathing extremely difficult due to heavy smoke in the air. One asthmatic 16-year-old has a severe reaction to the smoke. Staff administers epinephrine. The epi works for a while. The student's condition soon worsens, and he becomes unresponsive, stops breathing. CPR is started. Regional rescue services are tied up due to the wildfire. They can't respond immediately. CPR is continued and administered for over an hour until it's obvious to those on the scene the student has expired and died. So when you get into your groups, these considerations, just kind of talk amongst yourself and look at the scenario through the lens of your insurance coverage that Sam just went over, and talk amongst yourselves about which policies might apply within that scenario. Who in your organization would be notified? You know, who notifies the insurance company? What's the chain of command? What do you and your organization need to do to ensure coverage and trigger that coverage will trigger and remain enforced? And what other steps should be taken to ensure smooth handling of any future insurance claims or litigation out of that event? So we'll take about 10 minutes, kind of pod up, and just discuss it, and then we'll put your answers up on the board, and that'll lead us into a little more question and answer and some discussion.
You said 8, right? That's right.
Yes, jump in.
The chairs are connected. I might need to read this.
Yeah. Which policy? Now I wish I could take notes.
So, obviously, like your property management, sales and like the whole place
Maybe the car insurance policies are for vans,
Ideally, if you have a $500 gun,
Statement in terms of your business response management, when you talk to the staff, you're not taking care of it.
You want to notify your carrier right away. Right.
He's like unpacking that after he's generalized.
That's true, because we didn't count workers' comp. Employees are now.
Didn't say there was employees that were
No, but they're quite new hires, so there's a possibility that they might file a claim. Compensation claims, you have to have to come in there to see. Yeah, they'll be treated. And some may not.
right. I guess I'm thinking about
Miscellaneous.
What about the related price
I would get rid of the opt-out. If you're covering them anyway.
They also said that emergency medical services are not
Where the organization
It shouldn't be your battle. All you care about is your
inland marine, because I'm just there on coverage. We work primarily on volunteers. That's very What steps should we take? What was the last one? What other steps should be taken to ensure smooth handling of future insurance claims? So you have this crisis, you take people to apply right now.
You guys threw the stuff. I think it's a good time to hold on. I'll get rid of it.
I mean, I think one is there. You've got your insurance number. It's possible to get.
Yeah, we're.
We're providing this
Not really. In my experience, we call and ask questions and they don't get answered, but I also like to refer you to an adjuster with that company. They don't always have but I was thinking more along the lines of things like an incident response.
That's traumatic.
But you're still providing it. It's not
check on all the students and all
You're paying for it.
there. I don't like 10 days later. But I would like to
You're not in the spot.
I mean, it sounds like it's like the total loss. Or like every card.
All right, let's, I think most folks have had time to get through all of the questions, so either you come back up front if you were up front, and we'll get started again.
It's like you said, 10 miles. We had one within 6 miles.
Alrighty.
Several drainage stuff. So 6 miles by
You guys in the back, how many lawyers are in that back room?
impactful. So boy, is it.
Super, well, great. So I'd like to just go around the room and just ask a few questions and just get people to contribute and go from there. But maybe we'll start up here in the front left, to my left, is looking at this scenario. What are some of the policies that come into play in this scenario?
Auto, property.
Now, don't steal them all. Automobile for sure, right? Yeah, no, it's not.
Property,
Property, yeah. I didn't hear that. Right.
property,
Property, yes.
Yeah, general liability.
What's your concern on the general liability? What do you think is going to play out?
We're probably going to max out all of our bodily injury and basic property stuff. We're going to have to umbrella over it. Coverage.
Doom and gloom here.
It seems like a gloomy situation.
How about over on this side? What are concerns? What's that?
You could have D&O issue.
Could. D&O does not, one of those covered elsewhere, right? Is if there's a bodily injury or property damage, it's not going to be covered by a D&O policy. So,
But if you were sued because the directors decided to do something, I guess you can sue for anything.
yeah. So, yeah, the insurance company is going to owe you a duty to defend, but depending on the fact pattern, if the root cause was bodily injury, that it's likely going to be covered by the general liability policies in general. Yeah, Jane?
We talked about workers' compensation if your staff came back from the smoke, but would that also cover like counseling after the fact if your staff needed?
That's a good question, because most workers' comp policies have an EAP attachment to them, and we have a GL policy that offers some psychological and counseling assistance for critical incidents, post-traumatic stress for our employees. So look at your policies and talk it over with your broker and see where you might find that.
Employee assistance programs, is it EAP? Yeah.
Student accident and medical coverage.
Right. Any other esoteric ones that are, yeah?
With that inland marine?
Yeah, covered equipment for sure, right, good, thank you.
Probably business interruption, camp breakdown.
Yes. Yes.
We touched on another way you might get business interruption if the camp didn't burn down.
Right.
Right.
The ingress and egress. So we've had that situation where one of the camps, luckily, was spared from actual physical damage, but they couldn't get there. And so we've had property carriers pay out for that.
And extra expense, do you want to talk about what the difference is between business interruption and extra expense?
So most organizations are actually going to do everything in their power not to avoid having a business interruption, to avoid losing, having to refund money and lose that income. But you may incur additional costs to keep that programming going. So that's what an extra expense expense coverage is going to pay all those additional coverages or costs to avoid having to make a business interruption claim.
We're expeditionary schools, so if we have a fire in one area, we just move the course to another area, and the base isn't necessary to run our programs and keep the tuition coming in. But, so we'll move the base to another location too. And moving the base is covered. But we haven't lost any income because we keep the courses going.
Yeah, see some hands over here?
Yeah, go for it.
Okay.
So about a month ago, we had to evacuate one of our teams due to the fires. And so they stayed in a hotel for about 3 weeks. So would that be considered something as an extra expense due to?
So again, you know, if your base or one of your assets was not either damaged or potentially in the, you know, there's an ingress or egress situation, it's just you were out in the field
Yep.
and you had to call in the program, probably not property or business interruption, probably not going to cover.
Okay.
There is some, well, I'll get into it in a minute, if after we're done identifying coverages, there may be someplace else you can get that.
Okay.
We'll talk about that in a second.
Personal travel insurance, trip interruption.
Trip interruption, yeah, could kick in, yeah. Yeah.
This might be a question for a different session, but can you talk a little bit about the epinephrine and if you're using somebody else's prescription, your staff administered it?
Good one, medical malpractice.
So I'm a big believer in carrying epi, you know, so. Yeah.
But it's illegal in a lot of states where we carry epi, and this is an organizational assessment, risk assessment you need to make. We carry it, and technically it's illegal.
Right, so we don't have, we could do a whole session on that, but in general, an insurance company, an insurance policy would not cover illegal acts, and so that's the concern you have, is if it's illegal in a state. However, that being said, I lose more sleep about you not having a pen and not using it than I do about, you know, an insurance company actually enforcing or trying to invoke that exclusion.
Would that fall on, so if your staff administers that illegally, would that liability fall on the organization or on your staff member who did that?
No, it fall on the organization. They're acting under the direction of the organization.
Well, it could fall on them individually, but hopefully the organization would agree to indemnify them and protect.
And part of the risk assessment was talking to the medical professionals and looking at, I mean, the chances of having an adverse reaction with our population is pretty slim. So that's where your claim would come from. You know, the outcome is.
Great, there was another hand, right over here, yeah, Don.
I think this is not completely related, but if you are triggering all this coverage, then, and let's say it's covered, and then the company, the insurance company comes in and says, well, now we're either dropping you.
That happens.
Or we're increasing premium, and I'm wondering, is this coming into the decision
Of whether you trigger coverage or not? Likely not. You want to, yeah, if you have to take it back to not such a catastrophic incident, every auto claim we have, we go, okay, it's $1,500. We have a $1,000 limit on the auto. We might not report some of those that are right on the cusp because you just don't want the frequency of claims. So.
In general, if it's significant, I mean, that's why you have the insurance policy, and you're going to have to just grind it through. But there is no doubt that an insurance company is going to work to get some of their claim payment dollars back with increased premiums, or unfortunately, in some situations, some carriers do drop. But that's one of the things that in working with your broker is really important. It's not just who's the cheapest insurance company. It's finding a company that's good, financially strong, has a good reputation, understands your industry, and has the wherewithal to pay claims and keep coming back. So that's important.
Yeah, it's the folks that don't know what they're getting into. If you bought an off-the-shelf policy and some broker sold it to you and really didn't understand what you're doing, and when the claim comes in, the underwriter goes, how did we get in business with these guys? And so know up front that you're going with somebody who knows us. Any other policies that I think we've captured?
Before we ask some of the other questions, there was one additional coverage. It didn't come up, actually. You gonna, this next slide?
Yeah, throw that up there. Crisis, does anybody know what this is? Okay, with property, GL, cyber, there's there's a crisis response endorsement. I'll have it on the website, you can go look at it. I've used it a lot in the past. And basically it covers there's a reputational risk that you're responding to, and you're gonna be in the press, this wildfire, and you need to put family up, or you need to put students up, you're moving people around to deal with the reputational risk related to the peril. There's quite a bit of coverage, and it's usually first dollar, you don't have any deductible. And a lot of the insurance companies will tag this on to the specific policy. So it follows, just like excess, it follows that policy and comes into play for a specific peril, which is crisis communications and crisis communication management, and crisis response management is another coverage. Sometimes investigation. So look and see if you have that endorsement. If you don't have it, ask for it, because sometimes they'll just tag it on if it's not there.
It's definitely another coverage that don't just look at it on a spreadsheet and say, oh, yes, okay, both of these carriers have it. The devil's in the details. Some are much broader than others. So it can be a great coverage. Usually they do have notification requirements, so you can't just send them bills 3 weeks after the crisis and say, we incurred the coverage. You need to get them engaged, get them approving the PR firm that you're going to work with, and all of that.
24-hour notice, and then you have to get them the first round of your report within 90 days. So if you miss that first window, you lose the coverage, but it's good stuff.
So just a couple other things on scenario one. So, what did maybe someone describe, what would it look like within your organization if an event like scenario one had happened? Who's involved? How does that play out? Who wants to volunteer talking about that a little bit from their organization's perspective? How do you put the carrier on notice and all of that? There we go, in the back.
So I think for our organization, this would be, once that evac started, it'd be escalated to what we would call a red call. Yep. In which case our national office is notified. And I don't know if Steve's directly copied on that email or then the national office notifies Steve. But then I would assume that he makes the actual connection to the broker.
Yeah.
But that's how I think at Outward Bound it would work.
Yeah. In general, when it comes to insurance and notification, insurance companies provide wording saying, as soon as reasonably practical or something like that, that you need to give notice of a claim. But there are, especially on the liability policies, some very specific triggers. If there was death or paralysis or burns, most insurance carriers are going to require immediate notification. So.
Workers' comp.
Workers' comp needs to be
severity
timely
and
and have penalties.
hospitalization. And it's not insurance, but you have notification issues around OSHA. Yep. So if this young man, well, that was a student, but if you lost a staff member and they're hospitalized, I think overnight, or fatality or limb-threatening injuries, I can't remember the classifications, but you have to notify OSHA within 8 hours. I believe it is. And there's big fines if you don't.
There used to be a culture in organizations 10, 15 years ago that, especially with sort of reputational type issues, we'll keep it in-house, we'll take care of it ourselves. That really, strongly encouraged not going down that path, being open and collaborative with your brokers and with your insurance carriers.
So, there were a couple van questions that came up earlier. How many people are still driving the Econoline style, the older style 12 to 15?
The white one.
The white one. The one on the top slide. 12 to 15 passengers. Depends on how many. They're the same van, the old style vans. You could buy them with a 12-seat configuration and a 15. These are we got out from under these. We still have some on the road, but we're moving out from under them, and we're moving into a more modern vehicle. Fortunately, we were struggling with how to within some financial realistic number to replace our entire fleet of 15-passenger vans a few years ago. A lot of the schools have moved to leasing because we used to have layup periods in the winter that we got credit from the insurance company. And so there's some companies out there that will lease you the latest and greatest year over year. And a lot of our schools are using those organizations now. Those that are holding on to vans, we have a schedule where if we do have some of the old 15-passenger vans, they have the StabiliTrak. There was a certain year, you remember the year, Louis, but that they started putting StabiliTrak and other safety features on the older style vans. So we still have a few, we're not completely out from under them, but work in that direction because those are, from an insurance point of view, if a carrier sees that you have those, they'll insure them, but it's a big risk. And from a liability point of view, I don't think you can defend if you have a major incident with one of those old vans. It's just, there's too much information out there about their stability. I wouldn't want to be in a position to have to defend it, and that's why we're getting out from under it as fast as we can. So, any questions?
Just the new Ford Transit vans, are they
They
proven
have
to be safer?
There's a number of safety features in our transition over to newer vans. We didn't say go buy Ford Transits. We have a list, and I don't have it in the slideshow, but I'll see if I can find it and post it with this. But side airbags, it had to have certain safety features that are built into these more modern vans. And the older vans that we keep around have to have certain safety features from the older vans. Anything that doesn't have those, they're not even driving, we're getting rid of them, so.
To the best of my knowledge, I wish the National Highway Safety Transit Authority would proactively endorse them and say, yes, we approve these, but I'm not aware that they have.
Now, there's these, and there's the Dodge and the Mercedes, and it's just a matter of pricing. They all have the same safety features. Some folks are just going with minivans to get out from under the exposure to the 12 to 15, the old 12 to 15 passenger vans. Another question?